Welcome to the Real Estate Majlis podcast, where we dive into the latest real estate insights and trends. Whether you are a seasoned investor or a first-time buyer, our podcast is here to provide valuable information and expert advice. This episode is powered by Bayut, the UAE's leading property platform and proud member of the Dubizzle Group. Whether you're buying, selling, or renting, Bayut connects you with real estate solutions tailored to your needs using innovative tools like TrueCheck, TrueEstimate, TrueBroker, and Bayut GPT. From finding your next home to advertising your listings with confidence, Bayut offers real photos, real prices, and real properties, helping you make informed decisions in the market. We are here back again in one more episode at the Real Estate Majlis podcast. I'm Cecilia Reynaldo and have my co-host and friend, Mahmoud Alburai. Hello, Mahmoud.
Hello, Cecilia.
Great day. We're going to talk a lot on data today. We have here with us the COO of Property Monitor, Zhann Jochinke. Did I spell it right?
Oh, it's close enough.
Okay. Welcome.
Thank you. Thanks for having me. Pleasure to be here.
Thank you. Let's start with the questions. A lot of customers and investors want to take decisions based on data. What kind of data they should look for, and where is the best location for customers, especially investors, to find such data when it comes to decision-making enablement?
So it depends, I think, on what they're looking to invest in. If they're investing for end use, if they're investing for a rental property, it really depends on the type of property and type of investment they're making. A lot of people go to the portals and look for listings. They might make historically a decision on what prices should be based on that. But the best thing that we want to look at is actually closed transactions. So at Property Monitor, we're a B2B platform, so not directly to consumers, but we do empower others in the industry. So I mean, we're part of the Dubizzle Group now. There's a wealth of data on there. We have partnership with DOD. There's DOD site directly. The data specifically that you want to look at, you want to see what prices, not just what's on the market, but what things have been trading for recently. And then it even stems beyond prices. So it's not just looking at the price of a property and what they should offer or what they should accept, but doing research on the community and on the building itself, knowing where they're going to invest and what that means long term. Don't purely rely, especially for completed property. You can actually go out and see the property, drive by the property, research the community and what's around it, be there at different times and experience that. But really dig in. There's plenty of resources online. On Bayut, there's a wealth of knowledge on all the communities, on the transactions itself. So do the research there. There's plenty of tools out there that you can use to do that deep dive as a consumer. Then if it's off-plan, it gets a little bit harder, right? Because an off-plan property, you can't drive by it, can barely go by the site if construction started or not. There's plenty of listings on site. One of the best places to go is developers' website themselves. They tend to have it's their information, you know it's accurate, and it's normally the most up-to-date, but it still is a limited set of data.
Yes.
It's hard to know what's sold in the building because until the registrations come through, you don't see that. So that's when working with a broker or even someone in their sales team to ask the right questions and ask how sales are, and then to investigate and sort of look at that developer's track record. Are they brand new? Are they someone that's built dozens of projects? Look at their construction history. Do they deliver on time? Do they deliver a quarter or two late? Or are there sort of more maybe potential systemic issues where they maybe have some work to do?
So you obviously just mentioned that Property Monitor was recently acquired by Dubizzle Group and Bayut. So what does that mean to the real estate market?
What it means is a bright future ahead for data. So we were recently acquired a couple of months ago. We have built a business on the B2B side with professionals in the industry. So largely with developers and brokers, your consultants, valuers in the business, lenders. We've never really been direct to the consumer. We've been B2B2C, where we have some great integrations with brokers and developers where the data reaches them. On our platform, there's about 500,000 reports generated every month that are meant to get to the consumer. So we're reaching them that way. Now, as part of the Dubizzle Group, you'll start to see deeper integration across both. More of that data coming over to us, looking at their search trends, demand indicators that come in, now coupling that with transactional data and other data we have. When we were acquired, I was asked what the initial feelings were, and I'm a kid in the candy store, right? We are exposed to so much more data now, far beyond the transaction and even outside of the real estate space, to look at what impacts a purchase and what those demand drivers are and what's going on holistically in the market. because we've got different platforms that just aren't real estate. On the Dubizzle side, you have the classifieds that stem from selling your old golf clubs to buying a car. There's so much information now that we have access to from that side, which over the coming months and in the future, you'll see more and more of that integration come in, where we'll be able to put out more outsights and indicators about what's going on in the market wider place.
And it'll be interesting to see. I don't know if this is on the pipeline, but I have a lot of curiosity when it comes to buyer's persona or tenant's persona. We're still a little bit far, but understanding people's preferences, not just from a lifestyle point of view. How long does it take a tenant to become a homeowner? Do tenants go straight to investors? And, do people prefer properties with, Gulf views or sea? So I think there's quite a lot potential for us to extract to come besides the transactions.
So imagine that when you've got millions of views and interactions throughout a site on a daily basis, then you're able to aggregate that and look around, what are they searching for? And then depending on what data that you're collecting them, you're able to start to create those personas to go, look, JVC is seeing a high demand from young working professionals that have just been in Dubai for 12 months.
Exactly.
And then what would be great to see is after 3 years, are we now seeing those move to a villa townhouse community or somewhere else?
Yes.
Obviously, there's personal data issues that are involved with there, but to try and crack that nut where there's a way to have those insights and to develop those personas and show the journey through Dubai. Because what we want to see is that someone does come in, job offer, they're here, they rent, and then they start to have a family, and then they buy, and then Dubai becomes the forever home.
Yes.
That's the stuff that we want to see. That's what's pivotal for the long-term growth and viability of Dubai.
Yeah.
A lot of people nowadays talk about the Dubai real estate market, Abu Dhabi real estate market. Are we oversaturated? Are we undersupplied? Are we oversupplied? So from the data you have, what are the trends? And if you can comment a little bit on Fitch rating agency
the
that
Fitch
said
report.
15% expected drop. So all of these from data perspective.
But before he starts, just to challenge that in a way, and it'd be interesting to see how many real estate brokers, especially owners of agencies, they went quite strong, challenging their report.
Yeah.
So it did not make the brokers happy. I think obviously there is a position to maintain that the market is still viable and keep a sentiment of positivity. However, what is the data telling us?
So let's do Fitch first then.
Yes.
So they're not right and they're not wrong.
But that's
come on.
Diplomatic.
But no,
Too diplomatic. Tell us the truth.
I'll dig into it. They are wrong right now.
Yes.
But they're not right. They're right in their overall sentiment of what they're saying. So markets are cyclical. Everywhere around the world, it goes up, it goes down, it goes up, it goes down. And what tips it into that downwards phases is typically oversupply. Right? Are we at that point yet? Is the question that keeps coming up. If we look at the villa market and townhouse market, we're nowhere near it, right? Let's talk off-plan first. So in the off-plan market, the amount of launches that have been happening, if you look at the units that are being launched, about 70% is still apartments. Right? And that's pretty much representative of what Dubai is. It's a lot harder to build a villa and townhouse community. You need a lot of land, you'd know this. So it's undersupplied in that area. And when the market shifts, and I don't want to call it a correction because I don't think it's wrong, right? We're not correcting anything. The market will shift and go into that downward phase. And when it does, you will see certain asset types go down faster than others and certain communities go down faster than others. The time frame that they're talking about this year, right?
I have a challenge with that.
I have a challenge with it too. They're off, right? There is no major indicators showing that right now. There is huge amount of growth, but there's also huge population growth as well, right? And the handovers that they are saying are going to be there is from someone that is looking purely at data and not boots on the ground knowledge here, which is why you had so many people up in arms, because they're like, that's not what we're seeing, it's not what's happening. I don't think a lot are actually challenging that will come down at some point. The timing's off. We are going to see, we always see it no matter what the market is, it's very rare project handover on that date that's there. There's very few developers that do it. You see a month, you see a quarter, you see maybe a year. With the sheer volume of projects we have, there's not even enough contractors to handle this. You've got developers, you've got contractors and subcontractors. There's going to be constraints on that. So you will see some unplanned delays that are there. So if we shift some of that there, this year, if everything happens, 60,000 units. What'll probably materialize? Closer to 40,000. And that's a number that will be pretty quickly absorbed. The following year, though, we're probably going to bump up to 70, 80,000. And after that, we could see 100,000. So if we talk timing, it's probably more likely that you'll see it 26, 27. And let's say the market does start to shift then. You'll see it in the apartment segment first.
Probably. Yeah.
And it will probably be the harder segment, and it'll be in some of where the most developments happen. So Business Bay, JVC, some of the things in Dubai South further out. You'll see some of those, and I don't think you see massive drops. In the single-family space, your villas and townhouses, you might see a little bit of price reduction, but the moment those prices drop, there's that many people waiting, they'll jump on it and prices will stabilize. In the completed segment right now, for love nor money, can you get a good villa or townhouse at a reasonable price?
Yeah.
I think that's going to be very well insulated throughout any shift that we have. Apartments, again, just because of the sheer volume of them, there'll be more downwards pressure. If it happens and when it happens, it's not a bad thing. If Dubai prices do drop 15%, Dubai just became 15% more affordable for a whole bunch of people which are feeling priced down. And it will go through a cycle and it will recover and will go higher the next time round. So the report itself, I mean, it's got the sentiment probably right, timing and some of their data points definitely off from a boots on the ground and also being intimately involved with the data. It's not right now.
To build on this, I mean, we talk a lot about selling price and so on, but we always kind of not focus on the tenant side. So what does the data tell us about tenancy? A lot of tenants now are overpaying. Some of the tenancy values doubled in the last few years. So where are we in the rental market?
So I think now you've seen, after the latest increase or refactoring of the index for rentals, a lot of people were able to come up to closer to market rate. Obviously, it was so renewals are coming to that market rate. New listings on the market, you're seeing them now, if they're overpriced, they're sitting and coming down. When the supply starts to come on, that's when you start to see some pressure come off and you start to see prices start to get eased down a little bit and become more affordable for some. In certain places, I think you're seeing a plateau already, especially in the villa and townhouse market because it went so quickly. And now, even though there's high demand there, people aren't willing to pay those huge prices that they might be demanding. In the apartment segment, there's still value in a lot of different places. But if you want to be in somewhere like Blue Waters or the Palm, those prices and the demand there are still driving those up. Landlords have backed off trying to be or play games or be sneaky. I think that the tenant and the general public now is a lot more aware of their rights. So that stopped. So I think that's also stopped prices running away too much. So it's not there yet. There is some relief inside. Every time you see a handover happen, it tends to take pressure off different communities. So when Ranches 3 handed over, it took some pressure off Ranches 2 and of Sustainable City and the things on the Al Qudra corridor. The next project we see hand over to again, it will relieve some of that pressure. You will see tapering off or plateauing of in that community. You'll see that rise in the other one, and then you'll get to where reasonable or fair market rents are without them being these ultra pricey tags where it's going up another 20, 30, 40%.
Two things don't lie. The first one is the rental market. And the second one is the traffic you see in the streets. We focus on supply, but also there is a demand. What's your take in terms of what is it that developers should do now? From your data, what decisions they should make?
So one of the biggest differences between this market cycle and previous market cycles is developers now are much more in tune and looking at the data. Whereas before, a developer, I'll say that with air quotes, might have access to a piece of land and some money, and they decide what they want to build. Right? And let's exclude the big developers out of this, but you had a lot of small developers come in. It was like, this is my dream, I'm building this, and doesn't matter what the consultants say, that's their vision. There's very few of them that would do that now. Now it's like they want to look, and this is where we work really heavily with them. It's like they want to look at not just what the unit typologies are, right? What the mix should be from 1 beds, 2 beds, 3 beds. They want to look at the amenities in the building, what tenants are demanding when they're looking at where another project succeeds, why they're succeeding. They're digging into that more granular data. So the amenities, the payment plans, other things that are there, what the community is like. It's now coming in, and there's, when you want to what's the experience like coming in that building, not just buying a unit in that building. So developers are looking much, much more at the data, even less so on the prices. The pricing's easy now, right? It's more about what's the experience going to be, and they're also looking about what's their brand going to be. If it's a brand new developer, like this is my first project, how do I get that win where I can go on to the next one and the next one? So that they're looking at demand a lot more, and what demand actually is, not just I want a property for what, and what those purposes are.
I agree. I think developers are looking at the lifestyle, the experience of the development in a much closer look and getting proper insights to what customers are looking for. But One part that is really bothering me is how small the units are becoming.
I call it shrinking sizes. I've wanted to write an article on it for probably 6 or 7 years. I came out 11, 12 years ago. You go in the Palm and you see even the hallways are 3 meters wide.
Yes.
Now you go into a building, you're lucky if you can get a sofa through
Yes,
them.
yes.
A studio used to be 500, 600 square feet. Now
Yes.
you're 300.
Yeah.
A bedroom in some of these units now, you can barely put 2 side tables next to the bed.
True.
For me, I see it as a pending quality of life issue. Being in such a small space for such a large part of your day, where a lot of developers, I think, are looking at it that it's about margin.
Yes.
We put more units in, we can make more money.
Yeah.
I would run an analysis on this going, if you were to have bigger units, a higher price per square foot, the demand is there. Even in villas and townhouses, some of them build now where you're in your kitchen and you can see into the bedroom of someone else's villa. Right? You take somewhere like the Springs Meadows or original Arabian Ranches where they have a much larger plot. I think you've seen recently with some of the larger and newer launches of some of the villa communities where they've gone back to, all right, we're going to give it a little more plot space, a little more privacy.
Yes, the plots also are getting so small.
And they've bumped up their price per square foot and they've gotten
Mahmoud
it.
is looking at me like... But it's true, right? In the end of the day, the main reason people move from the apartment is for villas to have space.
And I mean, it's also, you can't blame the developers for it because the demand is there, especially when there's such a big investor base. It's never going to live in the unit or see it.
Yeah.
So they're looking at it and going, great, I can buy it for this, I can rent it for this. They're not thinking about those things. But it would be tough for developers to change. I saw it in New York. It was the same thing. You saw them get smaller and smaller and smaller. I'd love to see it change. I'd love to see almost minimum standards that you can have for certain units. For me, they're getting too small, too cramped, and not enough space.
Yeah, and I think developers need to believe on the project, believe on what they want to achieve, and I think buyers will come.
Yeah.
Another point that is also bothering me right now in the market.
Why
I get
you
all the
so
bother. I
bothered?
get all the bothering.
No, but that's the
You bother,
opportunity
what's-
to talk about data, is the valuations, right?
Yeah.
I mean, when you think about the US, I think you got instant valuations now from prop tech companies.
Yeah.
And here the bank sends someone, and then what I find, and this is reality, right? So that's why I'm going to say as it is. They call the broker that specialize in that community and say, hey, what was your last MOU? What was the last price? And they kind of do a mix and match to what the broker think and some data points they have a look. And they tend to go probably more with what the broker is saying. Why are we still in that space with all the information available?
It's because it's what they're used to.
Yes.
The qualifications they might get from whichever global institution teaches it a certain way. And that way hasn't really evolved much in the last 20 years. And I think there's a reluctance to be sort of displaced by technology. AVMs, automated valuation models, are getting better and better each day. We built our own. Before being acquired, Bayut also built their own. Both are very good models, and we benchmark it against both closed transactions and surveyor valuations. Yet they're not used here because of central bank requirements.
Yes.
What I think you'll see in the future, and how it starts in other markets, is banks will start to use them on refinance and low LTV.
Right.
And then they'll start to use it on new purchase, but with very low LTVs, 50, 60%, where if there is a margin of error in there, it's kind of accounted for and there's de-risking.
Yeah.
And then as more and more confidence comes in, you'll see them used. The surveyors relying on stepping away from the transaction evidence, that's really only should be done, in my opinion. And I don't carry those qualifications, and I'm not saying they're bad qualifications. If there's enough transaction data, recent transaction data to support it, then that should be what's there. And then you use the additional evidence from the brokers or whoever you're talking to help validate that. But it should never be relied on as the leading one. Pending sales from a broker, unless you're even if there's a Form F, that's still not locked in.
It's not
that cannot happen.
No, absolutely.
Relying purely on a phone call from someone, I think it's kind of there. And surveyors actually asking for what's the MOU price, SPA price on this property, that's a no-no. They shouldn't know. That can, with the best, it can subconsciously drive bias into it, where that's the price I've got to hit, or they start factoring that in. So I think there's a lot that do a good job. There's a lot that take shortcuts, but I think technology coming in, you will see AVMs play more and more of a part. They might be in parallel with a surveyor. It could be from the same one. It could be that there's one that's being used by the bank at the same time. So you get your physical valuation in and there's an AVM that's with it as well. And they're looking, are we seeing a difference here? And if there is, then it goes a query on it. Why are we seeing the difference? But I think there's a bit of a way to go. The industry itself, I think, is really far behind in technology in that space. But I think you will see growth in the coming years towards it.
Yeah, don't take me wrong. There are units that are super upgraded, so you have to put an X to
those
number,
ones are hard, right?
Which is, becomes a kind of a human touch and feel. But, I think what you see also happening is when it comes to handovers, right? So you get master communities have handover. A lot of the units, the typologies are the same. So you're going to have a 3-bedroom type A, 25 on the community, and yet the bank sends a valuer to go to unit 105 rather than do a bulk valuation. It just feels like we need to evolve a bit on this part, don't you think? Enough of me on this, Mahmoud, because I'm putting my grievances out.
My last question.
What else bothers you?
Now we talk about opportunities. So based on data, where do you see undervalued hotspots here in Dubai or Abu Dhabi? So based on data.
Good question. It's tough. There's not too many that would be undervalued. Where there's probably opportunity, it's in probably some of the older buildings in several different communities. Even somewhere well established like the Marina, you will find that they're not bargains, but if you're looking at them to stuff that has been upgraded or is a newly handed over project, you will find some older units now that are sort of struggling to compete with that, where they'll have a lower price, but they might need some renovation to bring it up to standard. One community I think that's probably a good example is Zhann, where there was a big gap between a whole bunch of stuff was built, not a lot of construction for a big period, and now you've got a huge amount coming on. You've got those off-plan launches probably trading at 15, 16, 1,700 a square foot, and you've got the ready properties trading at 800, 900, maybe 1,000 a square foot. So there's opportunity there, but it comes at you've got to compromise,
right?
You trade off. I might get something a little bit older, but I can at least upgrade my unit. I can put a little bit of money in there and probably still come out significantly less than something that's newer. In general, though, I mean, we're 4.5 years into the upward phases of the market. The bargains are gone. Right? Everyone's gotten them. So there's still value, definitely not bargains. I think you'll see value in some of the newer areas as well. Dubai South, Emaar South, further out in the peripheries, you'll see the Valley, Damac Hills too. There's some value there, but it comes again in a compromise. It's now a larger commute time that's there. One of my ones, I'm not going to say it's value-based, but Expo City, and right there, I think you've got all the infrastructure in place. You've had billions spent there, and now developers are building there. So you go into somewhere that normally wouldn't see those facilities and amenities day one. When those projects hand over, that's a hot spot.
That's amazing. Thank you so much.
Thank you so much.
Pleasure. Thank you for having me.
Podcast. I hope everybody enjoys, and I look forward to get you guys back soon. Every 6 months, I think, right, Mahmoud?
Whenever something bothers you, I'll be here.
Yes.
With data.
With data.
I always tell investors, base your decision on data,
I hope
not
so.
sentiment.
Oh, yeah. Look, sentiment's there, but always look at the data, what's happening. Don't get carried away with the rush that's happening. Always take a step back, take a breath, look at the numbers, and make sure it makes sense.
Zhann, Property Monitor COO, thank you so much for being with us today.
Thank you for having me.
Thank you.
Bye-bye.